profitable trader is a trader that consistently makes money. Emotions are the worst pilot. Our emotions and our nerve system is built to make us get out of the trade. You need to work with a trading plan. If you give it time and if you have patience, you should be able to become good traders at the end. That is actually the key thing, that if we can't manage our trades, we can't make money from trading. We need to learn to be very, very disciplined. The more mistakes we make, the more random our trading becomes. When you use a strategy, it's just very important you are sure that the strategy is working. All profitable traders are extremely good and focused on managing the risk. Simple strategies are absolutely the best. A simple plan is absolutely the best plan. So I have a few strategies, and for many years now, I have just been doing the same thing again and again and again. Trading is a journey, and it's a journey that takes time.
Hi everyone, very happy to see you. We have here Nanna Fick with us. She's going to take over in just a second, but I just wanted to, say hi to everyone before we begin the webinar. I'm Aline. If we haven't met yet in one of our live training rooms. So I'm Aline, one of the marketing team members, and I just wanted to hop on here and say hello and say, thank you to Nanna that she's taking the time to do this great presentation. I'm very happy to see that people are here, ready and excited. So guys, Nanna will take over now and we'll go over the trading plan presentation for today. We're going to learn a lot. Prepare your notes. We're going to jump a little bit between the presentation, some information and the charts. So prepare your notes, everyone. And I do want to say, guys, if you have a question, do not hesitate to ask here in the chat, okay? I will try to kind of keep an eye out for burning questions, but also note that we will have time towards the end. We have a specific time for Q&A. So if it's something super burning, it's like very important for the current topic, please don't hesitate to write it in the chat, but also know that you will have time to ask questions in the end. And yeah, everyone enjoy the webinar. I'm just here in the background, but Nanna, please take over.
Thank you very much for inviting me. I really like holding webinars and attending webinars because I think it's a great way to motivate people and to share some knowledge. And trading is a journey, and it's a journey that takes time. We have times where it goes up, we have times where it goes down, but it's a journey. It's an amazing journey, but it's also about building up knowledge more and more over time. And if you give it time and if you have patience, then you should be able to become good traders at the end. So that is actually the key thing, that you're patient and that you acknowledge that this is something you have to learn. This is like a tool. This is if you have to learn to play piano or tennis or something like that. You start at one point and you're maybe not the best, and then in time you build up more and more experience, you build up more and more knowledge and more competencies. So these webinars, they are a great way to give you some more information, that no matter where you are on your way to become a profitable trader, it will probably be beneficial and probably be something you can use. And the funny thing is that you can hear this webinar now and you can take some of the things I will present to you, and then in a year or 1.5 years you can go back and you can see it again if it's on YouTube or something like that, and then you will gain other things, because it depends very much about where you are right now and what you know and how much experience you have. So thank you very much for having me here to present this webinar about the trading plan. And a trading plan is an important tool in order to become profitable. We have strategies, we have different things, and we can learn these things, and of course they are important, but the process towards learning to manage our trades is what really matters. And the trading plan is you can't get around it. You need to work with a trading plan. So what I have done today is I have tried to build up what is it, how do we use it, etc. And then you can take the different parts of the trading plan and start to integrate it into your trading. Yes. And if there are questions, if there are things you don't understand or you need me to dig into, please ask the questions and I will do what I can to try to clarify. So today we will be going through why we need a trading plan. We will go to what a trading plan is, and then we will be looking at strategy, discipline, and risk management, which is the different subjects that a trading plan covers. And finally, we will try it in practice because I can sit here and I can talk for a long time, but there is a big difference between hearing me saying a lot of things and then actually see how it's working and what it is I mean when I mention the different things I will do towards this webinar. So that is what we will do in the end. And if we can find a nice trade or something like that, we will put that on and use the trading plan there. So a trading plan. Why do we need a trading plan at all? As I said before, the strategy is important, and a lot of people think I just need a strategy and then I can become profitable. But that is very far from the truth, because the strategy is a very small part of the trading. The very big issue and what we really have to learn is to manage our trades. If we can't manage our trades, we can't make money from trading. And the problem is that we can sit and look at a chart and we can have a strategy and we can understand everything and we can say, okay, I want to get in here and I want to get out there. As you have probably seen many times already, it's very easy to look at a chart and look backwards and say, here we should do this and this and this, and we should manage it in this and this way. But when we actually sit and have to manage the trade, have to go into the trade, get out of the trade, it's a completely different story. Then we aren't as cool and we aren't as objective. And the thing is that when we are not in a trade, we don't have any risk on, so it's not affecting us emotionally as much as when we get into the trade. As soon as we enter into a trade, we have the risk. And now we will see whether the decision we took was right or it was wrong. We will see whether the analysis we made was a good analysis or it didn't work. And very often it will be a feeling of, am I doing good or am I not doing good, which is actually not the case, because 50% of the time we win, 50% of the time roughly we lose. So but that is not how it feels. It feels like being punished if we didn't make an analysis that turned into a winning trade. And therefore, our nerve system starts reacting as soon as we're in a trade because it feels like danger to us. So we become driven by our emotions instead of being objective and working like a robot. And we have to find a way to come around that. So it's not our emotions that is handling and managing the trade, but it is the plan we have that is managing and handling the trade. So when we have a plan, what it can do to us is it can move our focus from the way it makes us feel when we are in the trade to what does the plan tell me I should do right now. So therefore, it's a super effective tool. Emotions are the worst pilot because our emotions and our nerve system is built to make us get out of the trade. Or if we are not in the trade and we are scared of not making the money in the market, jump into a trade without having a signal and stuff like that. Emotions are horrible. Don't listen to them. We need to learn not to listen to our emotions when we are trading. And the plan can help us do that. if we are driven by our emotions and if we give in to what they tell us to do, then the result of our trading will be chaos and randomness. And randomness is a really, really bad way if we want to be consistently profitable, and that should be the goal. So what we need to do is we need to build up a consistency in our trading. And in order to build up consistency in our trading, we need to learn to be very, very disciplined. What should we be disciplined around? We have to be disciplined around the rules that is dictating when to go into the market and when to stay out. And in order to do that, the only way to be able to do that is if we in advance know exactly what to do. If we don't have a plan, how can we be disciplined? How can we do the right thing? Because we don't know what to do. The plan will tell us what to do. And then it is, again, this is also creating a different focus point than the movements of the market. We don't have to sit and watch a candlestick go up and down, up and down, up and down. We have to watch the rules I have, the strategy I use. What does it tell me? Okay. And am I following that? That is what we need to focus on in order to become profitable and good traders. So, what is the trading plan? The trading plan is a clear plan for how to handle how we get into the market, how we exit the market, how we handle our risk, and how we take profit. So this is actually super, super simple. As everything else in trading, this is super simple. Trading is not complicated. Trading is and should be super, super simple, but it doesn't make it an easy thing to come around and an easy thing to learn and to do, because it is very difficult. But this should be something you get back to. If you get a little bit lost sometimes, remember, okay, trading should actually be quite simple. If it's not quite simple, then it is very, very difficult to make it work. So it's a little bit a matter about how much brain capacity we are able to use, and we can't use a lot of brain capacity because we have to be able to handle the trades. So simple strategies are absolutely the best. A simple plan is absolutely the best plan. So now we will dig into the different parts of the trading plan and the different parts of the trading. First of all, we will be looking at the strategy. And a strategy is a clear set of rules for how and when we enter the trade and how and when we exit the trade. There are a million good trading strategies out there. Some of them are based on indicators, some are based on price action. Me, for example, I'm a price action trader. So that is what I use. It doesn't really talk to me with too many indicators. Some strategies are based on fundamentals, and it doesn't actually really matter. What matters is what you're good at, what talks to you, because they're profitable strategy within all of these areas. Some strategies have a high win rate, some have a much lower win rate, and some strategies you will win a lot in comparison to how much you will lose. Some strategies it's about 50-50. So where the gain is smaller than what you lose, but then you need a higher hit rate. When you have a strategy, the important thing is the correlation between your hit rate and how much you win or lose when you win or lose. So are there any questions to the whole thing about strategies?
Seems like we're good to go.
Okay. That is super. So what you have to do is you have to take a strategy. So the strategy will give you the rules for how to enter the market. So, for example, you can use a strategy based on indicators. It could be moving averages. So it will say to you when the shorter moving average goes up between the slower moving average, then you should buy the market. And when it goes down again, you should sell the market. Please be aware, this is not a strategy I'm telling you. I'm just giving you an example. Or if you, for example, have an RSI and you see that the market goes down, but the RSI starts to go up and will start to get higher lows, then it's a good place to start buying. And again, it's just an example. Things has to be examined more, but I'm sure there will be a webinar about that at a later point. So that is a strategy. Then there can be different ways to get in. It could be that we have a trading range, and if we break out from that trading range, then and we stay out, we have momentum out, then we will buy the market. That could be a strategy. A strategy could be with fundamentals. If the numbers are like this and like that, then we buy or then we sell. That is very beneficial to stocks. Most stock traders, they are fundamental, where it's fundamental is way more difficult when you're trading actively, because it takes longer time before the fundamental drives the market in a direction. But that is the rules for how to get into the market. Then we need to figure out, okay, how do we get out of the market? And it could be, if we use the indicators, when they start to slow down, the momentum is not there, then we get out of the market. Do we move our stop up? Maybe we use a trailing stop. That is the rule that dictates how we get out of this market. So a strategy is just a set of rules to how to get into the market, how to get out of the market. Maybe you have a rule that says that if you risk one, then after one in your direction, you will take profit, or you will take half of your profit. And when you use a strategy, it's just very important that you're sure that the strategy is working, because there are many, many super good strategies, but there are also many bad strategies out there. So you have to examine first, is this a good strategy or a bad strategy? You can either rely on research other people have done, then you don't know for sure, or you can do your own research and say, is this strategy actually a profitable strategy? And again, it's very often the most simple strategies that are the most profitable strategies. I have one. It's in Nasdaq. It's on a daily base. It's 3:30 European time every day. There's one trade 3 times a week, but it is super, super effective, and it is just a super simple strategy and easy to learn. So it doesn't have to be very complicated. So that is the strategy, and the strategy will give us the rules. Then we have the risk management. And the risk management is the one thing you really, really need to be focused on, because if you aren't managing your risk, you won't be able to make money on the long term. You have to remember, this is not about making money 1 week and then you lose for 3 weeks. This is not about making money 1 month and then you won't make any more money. Then you will lose for a long time, because then we can't pay our bills. A profitable trader is a trader that consistently makes money. Of course, we have winning months, we have losing months, and that is the way it is. Some years are losing years, some years are winning years. That is the way it is, but it has to be consistent. And if we don't manage to manage our risk, that is not possible. All profitable traders are extremely good and extremely focused on managing the risk. When I go into a trade, I never know how much I win, but I always know how much I will lose at the maximum. So the funds we have are the tool we have. A trader without funds is not much of a trader. So we need funds to work with. We need funds to make money with. And if we lose them all, then we can't make any money. Then we can't work. So and besides from that, if you don't manage your risk, you can risk working for weeks or maybe months, and then you get into a bad period or one bad trade or something like that. And within 10 minutes, you can have lost it all. I had one student one time, and the student had actually made a lot of money, and within 3 minutes lost all of them. And it was a lot of money, and it was very, very difficult for the student to get back to trading, because the person really, really got hit by the market. And when you have been working for 1 year to make these money and they're gone suddenly, and it's your saving, then it's really, really bad. So risk management is so important that you can't focus on anything else. What you should focus on when you manage your trade is the risk you take on when you go into a trade. When you use these funded accounts, of course you can start over again, and that is a good thing that you can do that. But you just have to remember all of the work you put into it every time you have to start over again. So risk management is essential. And then we have the discipline. Discipline and consistency are two sides of the same coin. Discipline is to do the right thing again and again and again. That is what we have to do. The more mistakes we make, the more random our trading becomes. For example, if we make 4% in a month, we work an entire month and we can make on average 4% on a month. Then we can't really afford to have one trade where we suddenly lose 6%. Then we need to make sure not to use more than what we can use and do the right thing so we don't use more. If we, for example, take our profit too early, many people don't think about how much damage it does to the trading account to take the profit too early. And I'm sure that the people at the trading pit, they will be able to say that, because they see a lot of traders, and they see the good traders, they see the bad traders. I'm sure they will approve with me and say the good traders are the traders who are super good at taking their profit. This is a little bit about, because you also say you need to let your winning trades run. And that is true, because if you take your profit too fast and you won't make enough money to cover for the losing trades you have. So it has to be a balance. And that is exactly what the trading plan is here for. It's here to dictate to us, how is this balance supposed to be built up? So discipline is doing the right thing again and again and again. If we just 10% of the time, this means that out of 10 trades, you do the right thing 9 times, but the 10th time you don't, then you can ruin everything. And a good trader is a trader that trades a system and trade the same thing again and again and again and again. I have a few strategies. I don't have 10 or 20 strategies to use. I can't, it's not possible to do that manually. So I have a few strategies. And for many years now, I have just been doing the same thing again and again and again. And of course, sometimes I can feel that if I'm tired or something like that, it becomes difficult. And then I just know, okay, I can't manage my trade properly. Then I don't trade, because it's too damaging if you're doing the wrong thing too many times. So if you keep making mistakes, if you keep not managing your risk, or you keep getting out too early, or you keep not taking the profit when you need to take it, or you keep going into trades without having a signal about where to go into the trade, then it is your discipline you need to work with. You need to improve and make it better. I have, with my students, I have a number for the discipline. So we measure the discipline. The way I became good was measuring my own discipline to see how disciplined am I. And you should be at a level around 95% of the time. You have to do the right thing. Then it's a good place to be. And of course, 98 or 99% of the time, that is where you should end up. So you just work like a robot. So the trading plan summed up. With all this in mind, it's a risk we need to manage, there's a discipline we need to manage, we can't focus on our feelings, we need to focus on the plan, then it becomes hopefully quite clear how important and helpful a trading plan is when you have to become profitable traders. Because the trading plan will tell you how to get into the market. It will tell you how to get out of the market. It will make sure that you manage your risk, and it will make sure that you get the profit when you need to get the profit. And it gives you a tool you can focus on instead of focusing on how you're feeling. Of course, you need to work with how you're feeling, but this can be a focus point instead. And if we did follow all of the above things in our trading plan, then we have improved our discipline and we have handled our risk. So I hope you can see how important the trading plan is. Are there any questions now?
We do have two people that have raised their hand. I have here Matthias and Oliver. Guys, if you want to drop your questions in the chat, or if you prefer to talk with us in voice, please just feel free to let me know what you guys prefer to do in the chat, because I do see your hand raised. This is Matthias and Oliver. Let's give it a second to see if they will type in something. If not, we can proceed. Let's give it a moment.
Yes. I will just move over to
Oh, there we go. There we go. We do have two questions. So Matthias is asking, no, sorry. Okay, Matthias says all clear. No worries. And Werner asked us another question. I think we will answer this one specifically in the Q&A. I'm saving your question. Werner, I'm saving your question. Don't worry. I have noted it. We will answer that in the end. Don't worry about that. Nanna, I think you can proceed.
Okay, so the actual strategy I use. So this is when you have to make a plan. Then how do you actually make this plan? You need to use your strategy as the base point. So you take the actual strategy you use. The strategy will tell us how to get into the market. Do we work with breakout and follow through, retracement, market orders, limit orders? I will show you these things in the chart in a minute, because then it's a little bit easier to understand these things and to see these things in practice. How does it work? Then the trading plan should contain the exit. How do we get out? Do we get stopped out? Do we take profit? Do we use a trailing stop, or is it at a specific time every day, or something like that? Then it is the risk. How much do I risk? Do I risk 0.5%, 1%? How much do I risk? And then take profit. What are the parameters for that? Is it a specific time, or what is it? So these things will be dictated by the strategy you choose to use. And I will go to, no, that's not it. So I will just stop this one and I will share. I will share this one. Yes. So here we have a chart, and it could be that we have a, I need to find a square here. We have a, I take this one. We have a range here. We have a trading range here and here. I hope, can you see? Can you see?
Yes.
Good.
We can.
That's good. This one. So I can have a strategy that says when we have a range and we break out from that range, we have breakout here, then we can either, I will make it a little bit bigger. We can either I need an arrow. I will take this one. See, here we have a breakout here and we have a follow through. So I will be selling here. That is what I need. This is my signal. So I would wait for that. And this is not, I'm not giving you some strategies here. These are examples. And then I will have my stop loss on the other side. This strategy might have a hit rate of 50% or something like that. But then I will sell the market here. I would put my stop loss up here. In this case, I would be working with a market order and I would sell the market when this happens. It could also be, I say, we have this range and we are in a market that is moving down. So when we have this breakout and follow through, I want to sell the market on a retracement. We make this one pink and big. So I will sell the market on a retracement when it goes back. I will still have my stop on the other side of this range. It could also be that I had my stop inside the range, or it could be I had my stop above the last top. This is where you need to go in and examine the different strategies or get strategies you know that that can be used and are beneficial, so and are working and are profitable over time. But this is the rule for how to get into this market. Then we need a rule for how to get out of this market again. And it could be that I would take profit. Now this is Forex, and trading Forex and trading indices are two very different things. And personally, I trade them very, very different. So in Forex, it is definitely my favorite to say we have this risk. So I will take profit after 1-to-1. Or maybe I take half of the profit after 1-to-1. And the rest of the trade I will keep running. Or what I could do is I could we would be selling here. So if the stop was here, we would have been stopped out. If our stop was up here, then we would be in the trade, and then we wouldn't get the first profit before. Is it possible to? Yes, like that. Then we would get to the profit target down here. But these are the rules, and what we have to do is to be consistent. So we have to follow the rule again and again and again. And in this matter, if I, for example, say I will take one part of my profit after when I reach 1-to-1, then I take it out. I will put an order to get out of the market down here. So with this strategy, I will be using a limit order to get into the market, and I would be using a target order to get out of the market again, and a stop order where my stop loss would be. I could also have a strategy that say, okay, we have moved out from here, and I would like to, when the market is retracing, I would like to go up to where the liquidity starts. It's up here. Up here, I will put a limit order. That is my rule. I need the breakout. When market is retracing, I want it to retrace all the way back here, and then I sell the market, and I have my stop above this area. I will take profit after 1-to-1. So the first profit would be like this. Then I would take the first profit, and I will cut my trade into 2 or 3. Then I will follow the market, and I will move my stop down with the market above the last tops. Now that is my set of rules. So that is what I put into my trading plan. Now I have the rules for getting into the market. I have the rules for getting out of the market, and I will follow that every time. Then I need to decide what is my risk parameter. So it depends a little bit about who you are, how risk averse you are. It depends on the trading account you have. If you, for example, can lose 7%, then if you risk 2% on every trade, then you really need to be right. And of course, you can be super good at that, but it's just a high risk. So if you, for example, have an account where you can lose 7%, I would personally say I will risk 0.5% of my trade. So that is the rule I follow in my trading plan. And I can see I have here 50 pips from where I enter into the market and to where my stop is. It is 50 pips. And then I take the size of the account, and it's 100,000. And then I say, okay, with 50 pips, how much can I enter into the market with? And that would be, it was 50 points. So that would be around one lot, I think, one full lot. You could enter into the market, then you risk 0.5% in this specific trade. This is on a 4-hour chart. That is why we enter into the market with smaller positions. If we're trading this on a 10-minute chart or 1-hour chart, then the amount of pips we risk will be smaller. So we go into the trade with a bigger amount. But that's not important. The important is how much of our account size do we risk. So now we know that. Now we know everything, and that is the plan. So for me now, instead of sitting here and seeing, okay, I got into the trade here, or I got into the trade here, and be super stressed because now the market is moving up and down and up and down, and what should I do? Then I just focus on, okay, these are my rules. That is what I do. This is what I follow. Then I don't have to worry about the other things. Are there any questions?
No new questions. Guys, type in the chat if there's anything you want to ask. Okay, we got the all clear from Fernando. We're good to go.
So no questions? There were no questions now?
Nothing. Everything is super clear. Thank you.
Okay. So this is maybe we could see in practice what we could do here.
If I may, before we practice, there is a question here from Kiara. Kiara, thank you so much. Kiara is asking, is the risk in swing trading generally lower than in scalping, considering factors like trading duration, market volatility, and position sizing?
You should always risk the same percentage of your account. And for me, I like to risk 0.5% of my account. So that is always the same. But if you trade on a 5-minute chart, then the signals you will get where your parameters, they are there, and the market, you get the market shows you what you're looking for. There will be many more false signals on a 5-minute chart than there will be on an hourly chart. And on a 4-hour chart, you will get even more solid signals. So on a 4-hour chart, I would have a very high hit rate because the signals are just very, very solid, and they are not as solid on the 5-minute. There are not as many mistaking signals on the 4-hour chart as there are on the 5-minute. I risk 0.5%, but you can see here on the 4-hour chart, if, for example, I want to buy on a retracement down to here, as an example, and I will have, this is 1 hour, and I will have my stop loss below the bottom here. Then it is 17 points. And then I would be able to enter into the market with 3 lots. Then I would risk 0.5% of my account. If we go to the 5-minute chart, and I say, okay, I want to buy down at this area where we have some liquidity. I want to buy down here, and my stop would be underneath these bottoms I see here. And I'm not saying I would do that, but just as an example. Then we have 4 points. And if I have a risk of 4 points and if I have a risk of 4 points and add that in and still risk 0.5%, then I can go into the market with 12 full lots. So that is a difference, but I still only risk 0.5% of my account. But I would say that it is way more likely that the market would go to this area down here and bounce up without me being stopped out on the 1 hour than it is on the 5-minute. I definitely see a bigger chance that the market breaks through here, because here we have four points down here, but you can see on the 1 hour, it is these bottoms here we see on the 5-minute. And if I think the market is about to go down here to pick up on the liquidity here, then I most likely would be stopped out on the 5-minute. So there are just a higher chance of hitting the market correctly on the 5-hour, on the 1 hour. And as you can see here, this is the 4-hour chart, and maybe the market would actually go down to this liquidity area down here. Then I would also be stopped out on the 1 hour. So it's a little bit, it's a matter about who you are and what you like and how you like to work with it. If we should, but the way to do it and the way to work with the trading plan is completely the same, whether we are on a 5-minute or we are on the 4-hour or daily or whatever we do. Personally, I make more money doing swing trading than I do on the shorter time frame. So that is just, and because I've been trading for more than a decade and been a trader for more than a decade, so I'm maybe more experienced in seeing where the market is going, where it can be a little bit easier when you are new to trade on the smaller time frames, because then you see a result way faster than you do if you trade on the 4-hour chart. And you need to know what will happen when you have less experience. That's that's what I experienced so far. Yes. Any other questions?
I think for now we're good. We can proceed.
Okay. Right now it's where I am right now. It's a 6:45, and at this time of day, markets are very, very quiet. So you can see it's not moving super much here. Maybe we could try and see if we can find US 500. So what is the name of the Dow Jones? US 500, we can take that one. Let's see if we can take that one. I just changed black and white, and okay. So this is the S&P 500, and sometimes there is a little bit more action in the indices, but it will pick up in a couple of hours before we see some action. This one is not moving a lot either. So the euro dollar, yeah, I think I would like to see the market. I would like to see the market get down here. So we could say that my trading plan, the way I trade, would right now dictate me don't do anything right now, because we are in the middle of a range and we are most likely heading towards this area down here and this area down here. So my trading plan would say, I want to buy the market down here and I want to risk 0.5%. So I will put a limit order, and a limit order is an order where we buy when market is moving down, or we sell when market is moving up. So in this situation, I would place a limit order down here, a buy order, and I would have a stop of 50 points. So what I would do here is, I would say I have a stop of 50 points, and I would enter into this market with one lot. I don't know if you can see. Can you see the order window?
Yes, we can see.
Super. So I would put in one lot and I would risk 50 points. I think it's like that. And then I would put it down here. I would like to add a take profit as well, and I would do that after points. So I would say place order, and I would like it down here, and I would give it some space. So what I would do is I would now sit and wait for the market to get down here. My stop is in place. I would probably take it a little bit up to there, and then I would see, is this a profit target line in a nice place? And I think it is. I think it is. I think it's a good place to take profit the first time. Maybe I would place 2 orders and then only take profit on one of them, because then I take off half of the profit. So and then I still have the rest of the trade running in case there is a good momentum going up in euro dollar. So my trading plan has been followed now. The next step is that I keep to the plan when the trade is being entered. I like to set it up so I get an alarm on my phone when I get into a trade, and all of that can be set up so you get a noise and on your phone when you get into the trade, and then I'm aware, okay, now I'm in the trade, and then I can go there and start watching it. And then it's just super, super important that you don't change your plan when you're in the trade. Then you follow the plan. So don't move your stop loss up. Don't move your stop loss down. that is the most important thing. Don't move your stop loss down. So stick to the plan. Keep the stop here. What I would do when we hit the first target is I would take my stop and I would move it up to break even, because then it's a profitable trade no matter what. And as a trader, that is what we have to do. We have to make money. So if we can just make, if you can make 0.2% every day, then you can make 5% every month. And 5% every month, if you do that month after month, that is super good and that is super nice. Yes, are there any questions?
Kiara is asking a question, and also Hercule. Let's start with Hercule. Hello, I have a short question. Is it useful to include re-entries to the trading plan, or should you just create a new setup?
Well, the trading plan is actually whether you use re-entries or not. For example, could it be that, do I want to, if the market hits down here 2 or 3 times, will I enter into the market the second time or the third time? That would be a part of your rule set if that's important. And that all comes down to, when is the strategy profitable? So for me, it's a matter about, if I enter the second or the third time, how profitable is it? Because will I actually end up losing money in the long run when I do that? Another example can be, do I add to the trade? And I know that if I add the first time and the second time, they're both profitable on the long run. Sometimes they are, sometimes they aren't. But if I do it the fourth time, very often, when I calculate the entire fourth time throughout a year, it's not making me money, then there's no need to do it. So that is a matter about, when is the strategy profitable? But yes, that should be a part of the trading plan as well, definitely.
Brilliant. We also have another question from Kiara. Based on your experience, which time zone offers the highest volatility for trading?
Yeah, that depends completely on what you're trading. If you, for example, are trading indices, here we had S&P 500, and S&P 500 has the most activity at 3:30. It's a Central European time, so that would be 4:30 in the time zone that we have here now. But 3:30 Central European time, so in Berlin, Copenhagen. And then it has activity again in the evening before 10, so half an hour before 10, then there's activity. If you trade a forex pair, for example, euro dollar, euro dollar has the highest volatility when the countries for both pairs is open. So that is again from 3:30 and a couple of hours. But it also has high volatility in the morning when Europe opens, and in the evening when America closes. So if you trade dollar Japanese yen as this one, then I would just do like this, 2 seconds, default. And we'll go here, and then we can take default like that. If you trade the Japanese dollar Japanese yen, then the highest activity is when Japan and America are open at the same time. And for example, Australia and Denmark or Europe is not open at the same time at any point. So there you will have the highest activity when each country is open. So it depends on what it is you're trading. If you're trading the Hang Seng index, then it's when Asia is open. And yes, does that answer the question completely?
I do think it does. I do think it does. We do have a few more, but let's proceed, and then we will get back to these beautiful questions also in the Q&A because they're a bit more general.
But yes, so here I have now placed the trade down here, and then it's just about waiting. And then it's I can place these trades, or I have, for example, a strategy. It's not exactly in this one, but I have this strategy, as I said earlier, where I look at a range in one of the American indices. It's in Nasdaq, and when the market opens at 3:30, if we break out, then I would enter with a market order. And a market order would be that I don't really want to enter this one now because we are in a range. But what I would do is I would again say my trading plan dictates to me that I say, where is my stop? I would put it down here. It is 143 points. Okay, I put that in. So I would be able to enter with like that. That is the size I could enter into this product with if I want to risk 0.5%, and my stop would be down here. So what I would do is then I would simply, maybe we can't do that, it has to be 40. Then I would press the button directly, and that is a market order. So I go into the market where we are here and now. Always make sure to have your stop in place, and if you want to have a target in place. It depends on how you work with it, because it could be I have a strategy where I leave it until 9 o'clock in the evening and then I close it. Every time 9 o'clock in the evening, I close the trade. And I have found out through years that that is absolutely the most profitable way to do it. It doesn't mean that I don't sit sometimes and think, oh, I would like to close this trade because I don't think it goes any further. But that kind of micromanagement just cost me money in the long run, because I'm not as good at making these decisions necessarily as the statistics tells me I should do. Yes, so that is the different ways to do it, but the plan tells you what to do, and then make sure to follow the plan when you are in the trade. That is the most important message from here today, I think. Yes. Then we go back to and then there are questions.
Perfection. So we do have a few I would love to get back to. We have here Raphael asking, how long does it take before you have the experience to create a meaningful plan? It takes a certain amount of experience before you can even create a meaningful plan.
There is not a one answer to that. It is very, very individual, because some people, they have, for example, a year and they can focus 100% on their trading and nothing else. And of course, they will get to that point much faster than the people who have a job that they do and have to learn trading next to their job and only can work with it in evenings and weekends and stuff like that. This is a matter about getting the right knowledge, learning the right things, and the amount of time you put into it. So you can learn to do that in some months maybe, but it is doubtful that you will be able to manage your trade consistently after some months. That is not realistic. It takes time. You will be able to. I have students, and as long as they work with me, they become profitable quite fast, actually. But as soon as they're on their own, it becomes much more difficult. So you can, if you are connected to a person that can spend a lot of time with you, then you can learn it faster, and you can avoid some mistakes. So that is very individual.
Beautiful. We also have here Jennifer that asked if you can kindly share some books we can check out to keep improving.
Yes. I think that my favorite book is One Good Trade, because it really, really tells us about the process of learning to trade. And it's one of the owners of one of the world's most famous prop firms, the old time prop firms, and therefore it's also quite relevant here, I think. And it is really, really about, of course, there are some techniques and stuff like that, but it is way more about this process into becoming a profitable trader and staying a profitable trader. The 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 gaps we can fall into, full of mistakes, and the things we have to learn, who are the best teachers, and what to be aware of when we're moving from completely beginners to advanced traders. And I think that is super good.
That is beautiful. Jennifer says, thank you. Guys, if you do have more questions, please type them in while we're here in the Q&A. We also have another question that one of the guys here asked a bit earlier, and I think this would be a great time for you, Nanna, to tell us a little bit, how can someone become your student?
Yes, you can also, you can always, I have my website, nannafick.com, and you can see what I have in there. I live trade 4 times a week, every week, and I have some small, cheap courses. I have mentorships where I work with people for 6 months. So check my website and see if there is anything, and all educational materials are in English. So that should be for all. So what I'm doing is I try to provide my knowledge to as many people as possible, and as much as possible, because I think I really like to inspire people to get to know trading. So you can follow me without paying, and then you can of course get personal mentoring. So everything in between there.
That is super, super brilliant. So guys, if anyone is interested, don't hesitate, contact Nanna. You have here at nannafick.com. Do note it's Nanna with double N, okay? Nanna Fick.com, okay? I'm speaking from personal experience because I tried to email her and I didn't understand why the email is not going through, okay? Double N. Don't forget. And guys, we're gonna take another moment to see if there's any other questions that come in, and if not, then we will proceed. For the time being, I do want to say, Nanna, thank you so much. This is very, very helpful. We love seeing different people, their strategies, their styles, their basics, and how they're preparing, the approach for trading. I hope that people here have learned a thing or two. I hope everyone took notes. And I mean, from my side, that is pretty much everything. Nanna, any final words as well?
You are always welcome to contact me if there is some things you need to get clarified or something like that. And then you're always welcome. And I just hope that this has inspired you and helped you along your way. And I wish you an amazing journey, because trading is super fantastic, and I love it. So I hope you get the same passion about it.
Very, very good. Oh, we do have something really quickly from Linda. Linda has asked, which platform do you use for journaling trades?
I I have made my own Excel sheet that I have used for many years and shared with many of my students because it just contained the information I needed. So I don't I don't use any. I have an Excel sheet. I
So
like it.
Linda, connect with Nanna.
Yes.
Reach out. Get
Yeah.
that Excel sheet.
Yeah. Yes.
That's
Definitely.
wonderful. That is super, super wonderful. Everyone, thank you so much again for joining for today. I do recommend check out our website for any more other webinars. We have webinars that we hold also in Spanish, in Italian, sometimes also in German. We have many, many things going on. So don't forget to check out our website on the webinar sign up page. Nanna, thank you so much. It was really, really great having you. And I'll hope to see you next time.
Thank you very much, and thank you for providing an amazing platform that is super solid and some amazing products to people. That is very important, and I appreciate that very much.
Thank you so much. Thank you. Have a good evening, everyone. Happy trading.